Hello and welcome to Saurabh's classes. My name is Ashmita, and in today's class we are going to discuss certain multiple choice questions based on economics, especially on Indian money market. So let's start our discussion. Now the first question that is presented to you is the main difference between money market and capital market. Reason. Like, what is the main difference between these two? What is the main difference between money market and capital market pertains to? So here you have been provided with four options, that is like short term versus long term borrowing of funds. Then you have been given regulation versus non-regulation. Third one says national versus international character, and the fourth one says all of the above. So which one is correct? The answer will be number A. Why? Because the two segments, namely the short-term funds and the long-term funds, are mainly catered by financial markets in every economy. And the short-term financial market is known as the money market, while the long-term financial market is known as the capital market. And the requirements of the funds for the period of up to 364 days, that is known as the short term, is basically fulfilled by the money market, while the capital market does the same for the period above the 365 days, that is long term. Moving over to the discussion of the next question, which says consider the following with reference to call money market. The first option starts with it is where uncollateralized borrowing and lending of funds take place on an overnight basis. Next option is given it is a market which is exclusively dedicated to the banks. Number 3 is given cooperative institutions are allowed to invest in the market based on a 2017 circular of the Reserve Bank of India, that is RBI. Now we have to select the correct option or options from the multiple choice options which is given below. That is either A, which includes 1 and 2, and it can also be B, which includes only 1. It can also be C, which includes 1 and 3, and so on. So let us discuss which one would be the correct answer. The correct answer will be number B. Why? Because the call money market is an important segment of the money market when uncollateralized borrowing and lending of funds take place on the overnight basis. And call money market participants in India currently include the scheduled commercial banks, then the regional rural banks, the cooperative banks. Like in the cooperative banks, it's other than the land development banks, and also it includes the primary dealers, like both the borrowers and the lenders. And RBI already specifies the prudential limits in respect of both the outstanding borrowing and lending transactions in call money market for each of these entities which I have just mentioned. The next question says, what is the importance of treasury bills? That is, in simple words, we can say the T-bills in the economy. Now, here they have provided two statements. That is, they provide the long-term capital to the government, especially for the infrastructure projects. Secondly, they have told that they satisfy the cash reserve ratio, that is the CRR, and also the statutory liquidity ratio, that is the SLR, requirements of the banking institutions that invest in them. So which of the above is or are correct? So you can include both of them, or you can include any one of them to be correct. That depends on your justification. So let's check which one is the correct option. The correct answer is number B. Started in 1986, they are the instruments of money market which are used by the central government to fulfill its short-term liquidatory requirements up to the period of 364 days. Now at present, only the 91-day T-bills, the 182-day T-bills and the 364-day T-bills are issued by the government. Treasury bills provide the short-term cushion to the government as well as the short-term investment avenues for banks and financial institutions. They also function as the requirement of the CRR as well as the SLR of the banking institutions. The next question says, which of the following is or are a part of the organized Indian money market? The options are like the statements. The statements include mutual funds, Exim Bank, then NABARD. So let's discuss which one can be the correct answer. The answer will be number A. Now there are around 8 instruments or components of the Indian money market which is specially designed to fulfill the short-term fund requirements of the different categories of individuals, as well as for the different categories of institutions or the firms and the companies which are there. Now these components or the instruments include treasury bills, then call money market, then certificate of deposit, then it also includes commercial bills, then commercial papers, then you have this repo and reverse repo markets, then you have mutual funds, then cash management bills, and so on. So Exim Bank and NABARD are a part of the financial markets. Moving over to the next question, it says, which of the following does not form a part of the Indian money market? Number 1 says treasury bills, number 2 says mutual funds, number 3 says share market. Which of the following they have asked? And you are given options to choose. You can choose any 2, you can choose any 1. That we need to discuss which one is the correct option. The answer will be number D. The development of the organized Indian money market took place after the 1985. Even though it was like present since independence, today there are around 8 instruments or components of the Indian money market specially designed to fulfill the short-term fund requirements of the different categories of individuals and institutions, of firms and companies. Now these include the treasury bills, the call money market, the certificate of deposit, the commercial bills, then the mutual funds, then the commercial papers, then you have this reverse and repo and reverse repo markets you have, then you have this cash management bill. So basically share market is a part of the capital market and the money market. Moving over to the next question, consider the following about the T-bills. That includes, these are issued to meet the short-term mismatches in the receipts and the expenditures. And number 2 says these can be issued by the government as well as by the blue chip companies. You can choose any one as the correct answer, or you can choose both as the correct answer, or you can choose any none of them basically as the correct answer. So let us discuss the correct answer possible. The answer is number A. Now there are 2 types of bills. One is the commercial bills and the other is the treasury bills. Now treasury bills, we also call them as the T-bills, are issued by the central government, and commercial bills are issued by the financial institutions. So statement 2, if we consider, is basically wrong. So these are debt securities, or you can say government bonds with maturity of less than a year. So to meet the short-term mismatches in the receipts and expenditure, T-bills are issued. Dated securities are the bonds with longer maturity. Moving over to the next question, money market is a market for what? Number 1 statement says it is a long-term borrowing for a period of 3 years or more. The second statement is saying initial public offers, that is IPOs of public sector companies. Then the third one says it's a short-term borrowing and lending process. The correct answer for this question would be number C. Financial instruments with high liquidity and very short maturities are traded in the money market, and the instrument's maturity range is from overnight to just under a year. So through system of finance bills, then commercial papers and so on, they help the industries to secure the short-term loans to meet their working capital requirements. And long-term sources of funding are provided by the capital market. So that was the entire discussion for today's class. We are going to meet with more such discussions and solutions of multiple choice questions from the economics section in other classes.